Hey John, how you doing? Happy New Year. Welcome back to, well, I guess we did that last month. So this is the first month of the year we're reporting on. We just finished going through some numbers, looking at what's been happening in sales. The job reports just came out for January. So let's kick off talking about how the year started off. What have you been seeing out there?
Yeah, it's been a bit of a mixed bag. Usually what happens is we see a noticeable decrease in well, all types of activity, whether it's listings, sales, whatever, in December as we get close to the holidays. And then when we come back in January, the first 2 weeks are still usually pretty quiet. But by about mid-January, we typically, I'm sure you'd agree, typically would see an uptick in activity, new listings, sales, and so forth. This year, we haven't really seen too much of that in most markets in Southern Ontario. There are a few bright spots. Hamilton, for example, I've noticed a healthy uptick in activity there, although pricing hasn't really changed. Other communities, Milton, for example, we were talking about Milton where the prices are up, but sales activity actually isn't. So there's a few highlights, a few bright spots, but overall, mixed bag. There's communities where you didn't even see the seasonal bump from December to January.
Yeah,
Burlington and Oakville, for example.
yeah. So I mean, when you look at the Canadian real estate market right across the country, obviously numbers are off there. Korea is reporting declines in sales across the board. But if we focus more in on our area, look at the GTHA, we're seeing some pretty dismal numbers out there, and a lot of that's driven by the condo market still. But what I
Yeah.
think a lot of people are not recognizing is that the condo market is really what if that market's off, every market's going to be off because that's the starting point. 80% of first-time home buyers start out in a condo. That's not happening right now. Interest rates have, for the most part, stabilized. I think we've had another month of hold. I don't think we're going to see a lot of activity over 2026 with interest rates. I think we'll see a lot of hold more than anything. It might go up or down a little bit here and there, but I don't think it'll be any major swings. So I think for the most part, we should see mortgage rates fairly stabilized right now beyond anything that happens in the bond market, which will affect fixed rates. So
Yeah.
again, that hasn't played into anything with real estate in the last year. We've had a lot of decreases and no results. But overall, it funnels back to the same thing we talked about last month, which is buyer confidence.
Yeah.
And with Canada shedding 25,000 jobs last month, that plays into it. Unemployment is a big part, or employment, job security, savings, interest rates, all these things come together to create confidence or buyer confidence out there, and there has not been a lot, and that will continue to drive the market.
Yeah, you mentioned the jobs. Most of those jobs that were lost were in manufacturing, and that's a direct result of tariffs, right? So then, and we hear that in the media just about daily these days. Well, for much of the last year, frankly. So, that ties directly to consumer confidence, as you said. If you're losing good full-time jobs, and another 2 days go by, and there's another tweet or truth or whatever they're called from the president south of the border, with some other tariff threat, it puts people on edge. And
It
and
does.
even if your situation is relatively comfortable, when you hear those kinds of things, you just kind of think maybe I got to push pause and you step back to the sidelines and maybe delay whatever your plans are for a purchase or sale of real estate for some period of time, and maybe other things too, whether it's new furniture, a renovation, a new car. I think a lot of people are pushing pause.
Well, it's happening out there everywhere right now, and I think there's no end in sight. I mean, we're able to really dissect 2025 right now. We're a month into looking at those numbers, and we got to see how that really shook out, and to see 2026 take off where it is, jump off where it is. I mean, the latest results that I'm looking at show sales are off to we're down to 2009 levels on sales, and which represents a 30% year-over-year decline. Which 2025 was our worst year on record. So what does that mean for 2026 starting out? And then you got pricing, which is off by 6.5%. And forecasters are saying by the end of 26 we may see some stabilization in the market. But the forecasts for the most part are pointing to another 6.5% decline in pricing over the next year. Now, none of us have a crystal ball, but they're talking about what we're in right now. And January certainly supported those speculations. So it's affecting everything, like you said, and housing will continue to feel it, being the driver of the Canadian economy.
Yeah, obviously everybody has their own unique situation. For some folks, they need to sell for whatever reason. Maybe it's a separation or divorce or it's an estate sale, moving to a retirement or assisted living facility, something like that. Those sales are still happening. In fact, most people that I've been working with lately fit into one of those categories. Um, when that happens, that property will still come to market, maybe potentially under less than ideal circumstances or in less than ideal market conditions, which, we've really ultimately seen over the last several months. And if you contrast to 3 years ago, for example, I think anybody would agree that today's conditions in the market are not as rosy as they were sometime, 2, 3, 4 years ago.
Well, no, I
But if you're
mean,
still trying, well, I was gonna say, if you still have to get that done, I think, the same old things always apply, and it's really nailing down the strategy, proper presentation, pricing, and just really making sure you've got that dialed in because otherwise, you could be part of that statistic on the information that we send out each month, days on
well,
market where there's a big number.
it's a big number. It's the biggest number we've ever seen. But I mean, I agree with you on most of that. But I think one of the things that I believe right now is the driving factor is price,
Yeah.
and um, we still have sellers that are struggling to come to terms with where the price is. We all fully understand where we were,
Hmm.
but it's not where we are today. I mean, everything has shifted, and buyers we're truly in buyer territory, and buyers definitely have the advantage right now. And
Yeah, leverage.
unfortunately, what I find is that we got a lot of people kicking tires out there, and we got nobody pulling the trigger. Lots of people looking at houses, and it comes down, in my opinion, to two things. They either want a house that's completely updated, newer, move-in ready, nothing they need to do. And when I say new, I mean people want the latest and greatest, newest of everything. They don't want half jobs done. They don't want like if they're buying in this market, and they're especially if you're buying in the Oakville market, places like that where you're paying 2 million plus for a home. They want a home they can move in and the work is done and they don't have to do anything.
Hmm.
And that's from their perspective, not from the seller perspective, but from the buyer perspective, what their expectation of done is. Or they're looking at a home that's not done the way they want and they're doing the math on that and saying the only reason why I would consider buying a home that's not all done is because I'm getting a phenomenal deal on
Yeah.
it. And I mean, when you're talking about these markets like Oakville, Burlington, Mississauga, that's a lot of the challenges we're dealing with because that's a lot of a lot of the inventory that we have on the market out there today falls in between those two areas. It's not fully updated and brand new, and it's not completely old and needs to be updated. It's somewhere in between, somewhere in the middle. And the problem is that makes up most of the inventory, which means people have a lot of choice and no urgency to make it.
Yeah. And so if the price doesn't reflect what you're offering, if you're trying to get a premium for something that maybe falls a bit
I don't
short.
believe premium exists anymore in this market. I mean, maybe it'll
Yeah.
come back when the market changes, but um, today people are looking for deals.
Yeah.
Bottom
Well,
line.
we were talking recently about number of new listings versus active listings and so on, and that active listing number is quite large these days. That's what's out there, and so when buyers have that
Well,
to their advantage, I mean they can look at yours, and chances are they can find a handful of others at least that would be reasonably comparable. And if the
John, just
prices
look at
don't align,
January alone for the GTA. I mean, the GTA had 3,000 sales last month, which
yeah,
unbelievable that it was that low. There should have been 3,000 condos sold in Toronto, let alone 3,000 homes total sold
yeah,
across the GTA. But the bigger thing is we had 10,500 new listings. That's 3.5 months of inventory in 1 month that came on the market,
just on your new listings,
just on new listings. Forget what was already out there,
yeah,
right? So choice is definitely to the buyer's advantage right now.
yeah. So anyway, I guess it comes down to managing expectations, pricing, strategy, all of that. Pricing,
And
as you said,
understanding the
number
market
one.
range, because like you did say earlier, John, there are markets that are seeing some activity, like the Hamilton market and that 6 to 7, $800,000 price range.
Yeah,
I understand they're still seeing some sales happening there, but as you move into Oakville or Burlington and you're seeing those $1.5 to $3 million price homes, there's a lot of those homes that are sitting on the market 150, 250 days on the market, and that's not unusual today. And then
yeah.
head farther east into Toronto, and you've got neighborhoods that have hundreds of condos available just in a small city block, let alone the entire neighborhood or city. So
Oh,
you
you could
still
have
have
you
a
have
ton of
dozens just in
inventory.
one building.
And yeah, so there's a lot happening out there, and unfortunately, there's not a lot of good happening in it. I think the point in all of this is that you got to be realistic in expectations. And remember, if you are selling in this market and you're buying in this market, hopefully you get to be in the buyer's shoes on the deal you're looking to buy on. So that comes down to playing the same game on that end, right? I mean, you're trying to
Yeah,
get the most you can on your sale. You're trying to get the best deal you can on your buy, and hopefully you have
absolutely.
the spread. That's really all you can ask for in this type of market right now.
Buy smart, sell strong.
It's what you got to try
I
and do,
put
man.
I put that on a billboard in town
I
the
saw
other
that.
day. Anyway, well, until next month, I guess we'll keep plugging away. I
Yeah.
hope there's a few more bright spots that emerge for other communities beyond.
I'm gonna blame the low numbers in January on the fact that we had that big storm and everybody shut down for a week. So that
Yeah.
was the way we
Oh,
rounded out January when things should have picked up. So let's hope February rebounds a little bit. I'm not expecting it to go,
it
set new
won't go
records,
crazy.
but at least let's get back to par.
Yeah. No, that'd be nice.
Yeah.
Well, until then,
All right,
happy
man.
selling. We'll talk soon.
Talk soon.